Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's talk about something that drives so many traders absolutely crazy, the channel pattern. You know the one. It looks so simple, so clean on the chart, but it's basically a minefield where trading accounts go to die. Well, today, we're going to flip that entire idea on its head. We're going to show you exactly why it fails, and more importantly, how you can start trading with the big banks instead of becoming their next meal. Let's do this. So first, let's set the scene. I want to walk you through a scenario that's probably going to feel a little too familiar for a lot of you. We're talking about that classic, predictable trading trap, the one that turns what looks like a perfect setup into just another frustrating loss.
You know this feeling, right? It's the absolute worst. You see a beautiful pattern forming, you get in, feeling confident, you put your stop loss right where the textbook tells you to, and then bam, the price just dips down just enough to knock you out of the trade before it turns around and skyrockets exactly where you knew it would go. It is infuriating, and you're not alone. This is exactly where 90% of traders lose their money, over and over again.
And if you're sitting there, nodding your head right now, listen up, because here's the hard truth. You are, without even realizing it, providing the fuel for the big banks. You're giving them the liquidity they need to fill their gigantic orders. You're not just losing a trade, you are literally the other side of their winning trade. But that all changes today.
So how the heck do we keep falling for this? Well, it all starts with what we're taught from day one, the good old textbook channel myth. It's a strategy that looks absolutely perfect on paper, but it just completely falls apart in the real world in live markets.
Okay, just a quick refresher, so we're all on the same page. A channel is super simple, right? It's just two parallel trend lines. You've got your support line on the bottom connecting the lows, that's your floor, and you've got your resistance line up top connecting the highs, that's your ceiling. Pretty straightforward.
Now, the theory we're all taught is just dead simple. Buy when price hits the support line, sell when it hits the resistance line. Easy, right? But come on, if it were really that easy, we'd all be rich. The reality, as we all know too well, is that price crashes right through that support, smacks your stop loss, and then, and only then, does it reverse. So why? Why does this keep happening? Okay, now we're getting to the good stuff. The secret of the smart money. This is the why behind the trap. And understanding this one concept is what will let you completely flip the script and finally start trading with the big players instead of getting run over by them. This quote right here really says it all. You see, when a pattern is that clean, that perfect, that obvious, well, everyone sees it. From the person on their first day of trading to a seasoned pro. And when everybody does the same predictable thing, like placing buy orders at support and their stop loss is just underneath it, they create a giant flashing neon sign for the banks. And that giant sign points to something called retail liquidity. I mean, think about it. Where does every single retail trader put their stop loss when they buy at support? Right below that obvious support line. All of those stop loss orders stacked up together create a massive pool of sell orders, just a big pile of money sitting there, waiting to be taken. And you better believe that pile of money is a target. The algorithms that the big institutions use are literally designed to hunt for these pools of liquidity. They will intentionally push the price down just far enough to trigger every single one of those stops. This isn't a real breakout, it's a liquidity grab. They're engineering a move to take your money, fill their orders, and then they start the real move up.
So, how do we stop being the hunted and start trading like the hunter? It's actually not that complicated. We use a simple but incredibly powerful two-step confirmation strategy. Let's break it down right now.
Okay, pay very close attention because this right here is the key to the entire strategy. Step one is what we call the sweep. We are not, I repeat, we are not buying the first time price touches that trend line. You have to be patient. We wait for the price to poke below the line, let it go down and trigger all those stop losses. And here's the critical part. We wait for a candle to close back inside the channel. That's signal number one. Step two is the shift. Once the price is safely back inside that channel, we zoom in. We drop down to a lower time frame like the 5-minute chart, and we look for the price to break the most recent lower high. This is called a market structure shift, and it's our final confirmation that the buyers are back in control.
This table just lays it all out, black and white. Look at the difference. The textbook trader, they're just gambling. They jump in on the first touch with zero confirmation, and they have a super high risk of getting stopped out. But the smart money trader, they wait. They wait for that sweep and reclaim.
They wait for the market structure shift as confirmation, and they have a much higher probability of catching the real move. This is a complete game changer. It's moving from reacting to predicting.
So let's talk about the actual mechanics of the trade. Your entry is after the price has reclaimed the trend line and you've seen that confirmation shift on the lower time frame. Now your stop loss, it goes just below the low of that candle that did the sweep. This is so important because it makes your risk incredibly small and defined. For targets, you can aim for the midline of the channel to take some profits off the table, and then you let the rest of your position run to the top. This setup often gives you these massive, massive risk-to-reward ratios.
You see, when you start thinking this way, you're not just learning a new setup, you're fundamentally changing your entire approach. You're gaining a whole new edge in the market. Look, if you take only one thing away from our chat today, let it be this. Stop being the liquidity. Stop putting your orders in the most predictable, obvious places. Instead, be patient. Let the institutions show their hand first. Wait for them to make their move, grab the liquidity, and then you jump on board and ride their wave. This is how you stop being the sheep and you start trading like a wolf.
So I'll leave you with this one final thought. The next time you open a chart and you see one of those perfect, clean-looking channels, what are you going to see? Are you going to see a simple buy here signal? Or are you going to see a trap? Are you going to see a support line? Or are you going to see a pool of liquidity just waiting to get swept? That little shift in perspective, well, that's your new edge.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.